Imagine turning your spare change into a fortune, or retiring early with financial freedom. What if I told you the secret lies in the stock market? Whether you're dreaming of financial independence or just curious about how investing works, this comprehensive guide will unlock the doors to the world of stock market investing. Ready to transform your financial future? Let's dive in. Welcome to our beginner's guide to stock market investing. If you're new to the world of stocks, mutual funds, and ETFs, you've come to the right place. Today, we'll demystify the stock market, cover essential concepts, and provide you with actionable tips to get started on your investing journey. Whether you're looking to invest for retirement, build wealth, or just understand how the market works, we've got you covered. So, let's dive in. First, let's understand what the stock market is. The stock market is a collection of markets and exchanges where activities like buying, selling, and issuance of shares of publicly held companies happen. Think of it as a big marketplace where companies list shares of their stock and investors buy and sell those shares. Investing in stocks means buying ownership in a company. As a shareholder, you can benefit from the company's growth and profitability. Stocks are traded on stock exchanges like the New York Stock Exchange, NYSE, and NASDAQ, which are some of the biggest in the world. So, why should you invest in the stock market? Historically, the stock market has provided higher returns compared to other asset classes like bonds or savings accounts. Over the long term, investing in stocks can help you build significant wealth. However, it's important to remember that investing in the stock market comes with risks. Prices can be volatile, and you could lose money. But with the right strategies and a long-term perspective, you can manage these risks effectively. Before we go any further, let's cover some key terms you'll encounter in the stock market. A stock represents ownership in a company. A share is a single unit of stock. Dividends are payments made by a company to its shareholders from its profits. Market capitalization is the total value of a company's outstanding shares. The P/E ratio, or price-to-earnings ratio, is a measure of a company's current share price relative to its per-share earnings. One of the best ways to start investing is through the S&P 500. The S&P 500 is an index that tracks the performance of 500 of the largest publicly traded companies in the United States. It's considered a benchmark of the overall stock market performance and a great way to gain exposure to a diversified portfolio of top companies. Investing in an S&P 500 index fund, or ETF, is a popular choice for beginners because it offers broad market exposure and lower risk compared to investing in individual stocks. Diversification is a key principle in investing. It means spreading your investments across different asset classes, sectors, and geographies to reduce risk. By diversifying your portfolio, you can mitigate the impact of a poor-performing investment. For example, if you invest all your money in a single stock and that company underperforms, your portfolio takes a big hit. But if you spread your investments across multiple stocks, bonds, and other assets, the impact of one poor performer is minimized. Now let's talk about some of the best stocks for beginners. When starting out, it's wise to focus on well-established companies with a track record of stability and growth. These are often referred to as blue-chip stocks. Companies like Coca-Cola, Johnson & Johnson, and Procter & Gamble are examples of blue-chip stocks. They have strong balance sheets, consistent earnings, and often pay dividends. Another good option is to look at sector leaders in technology, healthcare, and consumer goods. To invest in the stock market, you'll need an investment account. There are several types of accounts to choose from. A brokerage account is a standard account that lets you buy and sell a variety of investments. An individual retirement account, IRA, offers tax advantages for retirement savings. A Roth IRA also offers tax benefits, but contributions are made with after-tax dollars and qualified withdrawals are tax-free. To simplify, a brokerage account lets you buy and sell various investments. An individual retirement account, IRA, gives you tax benefits for retirement savings. A Roth IRA also has tax benefits, but you contribute with after-tax money, and withdrawals are tax-free if you follow the rules. To simplify, a brokerage account lets you buy and sell various investments. An individual retirement account, IRA, gives you tax benefits for retirement savings. A Roth IRA also has tax benefits, but you contribute with after-tax money, and withdrawals are tax-free if you follow the rules. Choosing the right brokerage is crucial. Look for a brokerage with low fees, a user-friendly platform, and excellent customer service. Popular choices include Vanguard, Fidelity, and Charles Schwab. These brokerages offer a range of investment options, educational resources, and tools to help you make informed decisions. Now that you have an account, let's talk about some basic investment strategies. One common strategy is dollar cost averaging. This involves investing a fixed amount of money at regular intervals, regardless of the stock price. This strategy reduces the impact of market volatility and can lead to a lower average cost per share over time. Another strategy is buying and holding. This means purchasing stocks and holding them for the long term, allowing your investments to grow as the companies grow. Investing is a continuous learning process. There are plenty of resources to help you stay informed and make better investment decisions. Books like The Intelligent Investor by Benjamin Graham and A Random Walk Down Wall Street by Burton Malkiel are great starting points. Websites like Investopedia and apps like Yahoo Finance provide valuable insights and real-time data. Before we wrap up, let's cover some common mistakes to avoid as a beginner investor. Avoid emotional investing. Making decisions based on fear or greed can lead to poor outcomes. Always do your research before investing in a stock. Avoid overtrading, which can incur high fees and taxes. And finally, be mindful of fees. High fees can erode your returns over time. Investing in the stock market can be a rewarding journey if you approach it with knowledge and patience. Remember to diversify your portfolio, stay informed, and keep a long-term perspective. By following these guidelines, you can build a strong foundation for your financial future. Thanks for joining us on this beginner's guide to stock market investing. If you found this video helpful, don't forget to like, subscribe, and leave a comment below with any questions or topics you'd like us to cover in future videos.